I want to wrap up briefly just to talk about commodities. It's been a very interesting year, obviously, for commodities, especially gold and oil. Oil's had quite a turbulent, year, so to speak, from where it's been from the beginning of 2016 to where we are now. I know, obviously, we've recently had the OPEC meeting in the end of November. Where do you see oil prices in 2017, both perhaps at the start of 2017 and as we head on later in the year?
It's good that you distinguish the parts of the year there when it comes to oil, because I think at the moment, as you said, it's very much all about OPEC. Economically, supply and demand-wise for oil, the fact that OPEC are cutting back their production should mean that there's a deficit of oil supply in the first half of 2017. That should mean higher oil prices. If global demand holds up, you look at maybe the US and the Chinese economy, they're both doing pretty well at the moment. So globally, you expect oil demand to remain about the same. And we've seen the IEA and other agencies say that's what they expect, demand to go up slightly. The supply is coming in, so that should mean higher oil prices. I'm seeing $65 as a distinct possibility at some point in the first half of the year. The only trouble is that those higher oil prices, something like $60 plus, attracts in other suppliers who have not joined in with OPEC. So the US shale, the thing that sent oil collapsing in the first place, may become more of a factor again in 2017. So you may get that early boost, but the risk is that supply comes back into the market from the US, from other parts of the world that aren't part of the agreement, and makes up the deficit that they just cut. And the extreme scenario where the OPEC would have to be completely backtrack on this cut they've just done, that's all negative for the oil price.
Of course. What about gold in terms of the whole safe haven asset? Prices, where are we now with gold at the moment as we speak?
We were down through 1150 in gold, so that's very weak. I mean, we're still above the lows of the year, but gold has come a long way down from how well it started. The start of the year was literally the best asset class because there was so much concern about the Fed raising rates, but that just didn't materialize. Now with the Dow again at 20,000, a lot of optimism in the market.
Do you think it's going to be an underperformer then as we head into 2017?
That's what all the fundamentals point towards. The only caveat I'd put to that is, okay, based on at the moment, we're looking at the stock markets trending very heavily higher. We're looking at interest rates rising. No one really wants to hold a metal that doesn't earn interest rates, doesn't earn a rate of interest if interest rates are going up. But, what if stock markets start to wobble? You can never quite foresee the reason that they wobble, but you can just see that they're overstretched and valued and they're sensitive to something happening. People are going to need something to hedge that. Gold is just an obvious choice as a hedge. And so for that reason, even though it's looking very soft at the moment, I actually don't see it going below $1,000 an ounce in 2017. We'll see.
Okay, well, this is one to watch, and we'll definitely be discussing this more in 2017. Thank you very much, Jasper. That's all we have time for the moment, but join us in 2017, where, of course, every day we'll be discussing the markets in more focus. Goodbye for now.